We are back. It's the first DFW real estate update for the new year, and 2026 is already starting out fast. A major corporate move is reshaping a Plano business district. DFW just became the #1 market in the country for new home construction, and national housing policy could soon impact mortgage rates and affordability. Welcome to Jesse's weekly DFW real estate update. I'm Jesse Showalter. Let's get into it. Now that we're officially into a new year, some of the biggest signals about where the market is headed are coming from right here at home. Let's start with what's happening locally across North Texas. We're starting locally with a major corporate move that could have long-term ripple effects across North Texas. AT&T has officially announced it will relocate its corporate headquarters from downtown Dallas to Plano. This move reinforces Plano's position as one of the strongest corporate hubs in the Metroplex, but it also raises questions about downtown Dallas office demand, redevelopment timelines, and how surrounding neighborhoods will evolve. Plano, on the other hand, gains thousands of high-income employees tied to a long-term corporate presence. And when companies make decisions like this, the impact goes well beyond office buildings. Corporate decisions don't just affect where people work, they directly influence where people live, buy, and rent. Over time, moves like this tend to strengthen nearby housing demand, especially in established neighborhoods with good schools and infrastructure. Next up, a massive supply headline, and this one puts DFW at the top of the national leaderboard. According to new data from the U.S. Census Bureau, Dallas-Fort Worth authorized 71,788 new housing units in 2024, more than any metro area in the country. For comparison, Houston authorized about 65,747 units. New York came in at about 57, almost 58,000 units. And statewide, Texas permitted 225,756 new homes last year. On a per capita basis, DFW ranks third nationally with roughly 22.2 new units per 1,000 existing homes. This includes single-family homes, apartments, and condos, and it reflects both population growth and long-term demand across the region. Now, here's the important context. This is a massive supply story, but supply doesn't hit the market overnight. These homes roll out over months and years, and affordability relief will vary depending on the suburb, price point, and housing type. Still, this level of construction helps explain why North Texas continues to avoid the severe inventory shortage seen by many other parts of the country. What we're seeing here in DFW doesn't exist in a vacuum. A lot of these local trends are being shaped by policy conversations and market forces playing out nationwide. Turning to national housing policy, two massive stories hit the airwaves this week. President Trump has proposed banning large institutional investors from purchasing single-family homes. The goal is to limit Wall Street and private equity firms from competing with everyday buyers, potentially freeing up inventory for owner-occupants. Supporters argue this could help first-time homebuyers and families get a fair shot at home ownership. Critics say enforcement would be complicated and could reduce rental supply in markets where built-to-rent housing plays a big role. At its core, this debate comes down to one question: who gets first shot at housing, families or funds? Our next national story has direct implications for mortgage rates. There's growing discussion around directing Fannie Mae and Freddie Mac to purchase up to $200 billion in mortgage-backed securities. The idea is to increase demand for mortgage bonds, which can help push mortgage rates lower, similar to strategies used after the 2008 financial crisis. This is one of the few levers Washington can pull that directly affects mortgage rates. And importantly, markets don't wait for policies to be finalized. They price expectations fast. And when national policy conversations start touching housing, they usually funnel into one place pretty quickly: mortgage rates. Let's take a look at where mortgage rates are right now. According to Mortgage News Daily, on Friday, January 9th, when this video is recorded, the average 30-year fixed mortgage rate is now around 5.99%, down about 2 basis points recently. The 15-year fixed sits around 5.55%, with FHA and VA loans hovering around 5.6%. This marks the first time since September of 2022 that average rates have dropped below 6%, and the timing isn't accidental. Markets are reacting to expectations around bond purchases, future policy direction, and Treasury activity. If Fannie Mae and Freddie Mac do move forward with sustained bond buying, that could put additional short-term downward pressure on rates, even before any formal policy is announced. Rates are moving before policy is finalized because markets move on expectations, not headlines. When rates shift and incentives show up, the first place you really see that impact is new construction. So let's take a look at this week's New Construction Community of the Week. This week's New Construction Spotlight takes us to Sandbrock Ranch in Aubrey, one of the communities where buyer incentives, product variety, and long-term growth are lining up right now. There are 3 builders active in the community: Coventry Homes, Highland Homes, and David Weekley Homes, each bringing something different to the table. Coventry Homes is currently offering some of the most aggressive incentives in the neighborhood. On select move-in ready homes, buyers can see savings of up to $86,000, and Coventry is also advertising interest rates as low as 1.99% through preferred programs for qualified buyers. That combination of rate relief and upfront savings can significantly change monthly payments and overall affordability. Highland Homes offers a wide range of products in Sandbrock Ranch, with homes available on 45, 50, 60, and 70-foot lots, which gives buyers flexibility depending on lifestyle and budget. Highland is also running its kitchen upgrade event, a company-wide promotion that adds value through design and finish upgrades rather than just price discounts, something many buyers care about long-term. David Weekley Homes is celebrating its 50th anniversary savings event, which includes special incentives tied to the builder's milestone year. These programs vary by home and timing, but they're designed to create meaningful saving opportunities across select inventory and build options. Beyond the builders, Sandbrock Ranch itself continues to check a lot of boxes: resort-style amenities, trails, parks, fishing ponds, an on-site elementary school, and proximity to Frisco, Prosper, and major growth corridors. This is a great example of how early year timing, builder competition, and incentive programs can create real opportunities, especially for buyers who are prepared and paying attention, which brings us to this week's real estate tip of the week. For Jesse's real estate tip of the week is first-time homebuyers are seeing one of the more favorable setups we've had in a while. Mortgage rates are hovering around 6%. Inventory is around 5 months, which is close to a balanced market. Builder incentives are near cycle highs, and historically, January and February tend to be the lowest price months in DFW. Here's why that matters. Even small changes in rates can have a massive impact on competition. An analysis by Associated Bank found that a rate drop of just 6 basis points could bring nearly 2.8 million additional households back into the housing market nationwide. And when those buyers come back, competition quickly follows. That's why this window matters. Once rates move meaningfully lower, or even look like they're headed lower, buyer activity typically accelerates fast, especially in markets like here in North Texas. Spring 2026 will bring buyers back. If you are thinking about making a move this spring, the smart move is to start now, not later. If you want help navigating this market, whether it's new construction, resale, or simply timing your next move, feel free to reach out anytime. Having the right strategy matters more than chasing those pesky headlines. And that's Jesse's weekly DFW real estate update for the week of Monday, January 12th. If you found this helpful, don't forget to like, subscribe, and share. And just a quick programming note, my next update will be Monday, January 26th, and I'll see you then.